This is Nightly Business Report with Bill Griffith and Sue Herrera.
Stocks levitate. An olive branch from Beijing gives investors hope that the trade dispute with China will be resolved, and the market responds. Tug of war. Best Buy says tariffs are creating uncertainty. But in California, a surfboard shop owner is petitioning for more. Tricky talks. Federal agents search the home of the UAW president just as contract negotiations with the big three automakers heat up. Those stories and more tonight on Nightly Business Report for Thursday, August 29th. And we do bid you good evening, everybody, and welcome. Sue is off tonight. It was up, and away. Today's stocks moved higher, sharply higher, on a familiar theme, trade. Chinese officials were quoted as saying that they wanted to resolve the current trade conflict in the U.S. in a calm manner. Some took that as a sign that the Chinese government will not retaliate against the latest round of U.S. tariffs, and so the bulls ran with it on Wall Street. The Dow Industrial Average was up 326 points to 26,362. The Nasdaq added 116, and the S&P gained 36. But as Bob Pisani reports, this rally does not have the certainty of some others.
The rally rolls on. Stocks extended yesterday's gains after Chinese officials set a positive tone for U.S.-China trade talks. A spokesman for China's Ministry of Commerce said China is willing to resolve the trade conflict with a calm attitude, hinting that it has no plans to retaliate as of now. The statement comes just 3 days before the next round of tariffs are slated to go into effect on both American and Chinese products. Now, that happened well before the opening bell rang and stocks roared higher and were higher throughout the day. Trade-heavy industrials like Boeing and Caterpillar were up. Tech names like Apple and Alibaba were up. Even oil stocks like Halliburton and Hess, they all got a boost. These are names within the cyclical sectors, which have gotten badly beaten up this month. While on the flip side, defensive consumer groups like utilities, consumer staples, they're lagging for a change. Many believe today's rally may prove to be tentative at best. The market is stuck because traders can't figure out what the earnings outlook is for the next 6 months due to trade uncertainty and the direction of the economy in Europe and China. Right now, earnings look roughly flat for the year, up or down a couple percent. And therein lies the problem. Rallies like we're seeing today feel kind of fragile because nobody knows how the trade wars are going to end and how it will impact corporate America's bottom line. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Meanwhile, a new report out this morning said the U.S. economy grew at a revised rate of 2% in the second quarter. That was lower than the first quarter, but it was pretty much in line with earlier estimates for the second. Strong consumer spending helped offset a decline in business spending. A separate report showed the number of Americans filing applications for unemployment benefits rose 4,000 to a seasonally adjusted 215,000 for the week, a sign the labor market is still very strong right now. Pending home sales, which are signed contracts to buy existing homes, they reversed course and declined in July despite lower mortgage rates. Diana Olick explains what's behind those weaker numbers.
Home buyers in July were not so eager to make a deal. Pending home sales, which measure signed contracts for existing homes, fell 2.5% in July compared with June, according to the National Association of Realtors. They were also slightly lower than July of last year. This came after strong gains in May and June. Lower mortgage rates may have helped to end the spring season on a high note as they began falling at the start of May. But they did tick slightly higher in July before turning lower again in August. Today's buyers, especially on the low end where demand is strongest, are most sensitive to the smallest moves in rates. The reason behind falling rates, which is concern over the economy, also doesn't help.
There's more activity right now than I think there would have been if mortgage rates had stayed high. But there is a lot of uncertainty in the economy right now. People are worried about the recession that's showing up in consumer sentiment data, and it might be holding back what would have been a larger surge in demand.
Pending home sales fell across the nation, but most steeply in the West, where home prices are highest. The steeper drop in mortgage rates in August could help liven up the fall market, but there are still too few homes for sale, and supplies are no longer improving as they were earlier this year.
New listings are down right now, according to our data, and eventually, with more buyers out there and fewer listings, buyers are going to be competing for homes, and we're going to see more bidding wars.
More bidding wars will mean higher prices yet again. Not exactly what this market needs, as affordability is already stretched to the limit. For Nightly Business Report, I'm Diana Olick in Washington.
Our country's trade deficit with the rest of the world narrowed in July from the prior month. According to the Commerce Department, exports picked up. They were led by consumer goods and automobiles, while imports fell on a decline in capital goods sales. Economists say that the lower deficit is a positive, though, for the third quarter gross domestic product numbers. Well, when it comes to trade and the trade wars specifically, we have heard from a number of business groups who are urging the White House to postpone new tariffs or cancel them altogether. But that's not what one business owner in California wants. He's petitioning the president for more tariffs. Ilan Mui has the story tonight from Manhattan Beach, California.
These California beaches are the epicenter of American surf culture, and President Trump's trade war with China is making big waves here. Surfboards are on the list of Chinese goods that will get hit by the next round of tariffs. They start taking effect on September 1st. And one legendary board maker tells me he's totally stoked about it.
I'm a proponent for as high as possible because then it becomes competitive for me.
Dennis Jarvis is a former pro surfer and founder of Spider Surf. His workshop is not far from the beach, and he makes boards for celebrities like Keanu Reeves and Taylor Swift. At its peak in the 1990s, his shop was churning out 15,000 boards a year, his signature on every one. Now, he only does about 1,000 as the market gets flooded with cheaper boards from overseas.
It's a business that you have to really love to continue to chase it. And what's happening is because of the low cost of the imports, these guys that are trying to make a living doing what they love, they no longer have the rack space to be able to fit on in a retail store.
The industry estimates roughly 1/3 of surfboards sold in America are made overseas. Government data shows the U.S. imported more than 900,000 surfboards last year, most of them from China. Overall, the surfing industry is against the tariffs. In a letter to the Trump administration, its trade group warned that tariffs will lead to higher prices, lower sales, and lost jobs.
So we do agree that a new trade agreement is to our industry's benefit, but at the end of the day, throwing tariffs on all of these goods to achieve a balanced trade agreement, we don't agree with that.
Jarvis will feel the pain from the new tariffs as well. In addition to his workshop, he runs 3 retail stores out here that sell clothes, gear, and yes, even Chinese surfboards. But he said this fight is not about personal gain, but preserving a way of life.
The surfboard is the nucleus of so many factors. You take in skateboarding, derived from a surfboard, snowboarding, derived from a surfboard, music, Beach Boys. When you change that nucleus, what's going to happen to the rest of the industry?
Jarvis has even started a petition to take Trump's tariffs on surfboards all the way up to 70%. He says he's got 100 domestic board makers behind him, thousands of customer signatures, and he's even built a custom Make America Great Again surfboard in hopes of getting the president's attention.
I don't have all the answers. I'm just trying to shake the tree and see what falls out and try to work with people that are compassionate about people that are losing their livelihoods and having to leave towns or even California to find work.
For Nightly Business Report, I'm Ilan Mui in Manhattan Beach, California.
Elsewhere, one day after the FBI raided the home of the president of the United Auto Workers, the question being asked right now is how will the probe impact upcoming trade talks with the big 3 automakers? As Phil LeBeau reports, that contract is up in 2 weeks.
When UAW President Gary Jones marked the symbolic start of contract talks with automakers by shaking hands with the leaders of GM, Fiat, Chrysler, and Ford, he said the negotiations would be all about getting more for members. But the FBI's expanded investigation of corruption at the UAW is now hovering over these talks, especially after FBI agents raided Gary Jones' home looking for information about corruption at the union. Over the last 2 years, 7 people, including former UAW leaders, have been convicted of receiving payoffs from vendors of training programs. After the FBI raid, the union issued a statement saying the UAW will continue to cooperate with the government in its investigation, as we have been doing throughout. But with more UAW leaders being questioned about corruption, will it impact how union members respond to contract offers? Many rank-and-file members are frustrated with the big 3. GM workers in particular are not happy the automaker idled plants in the U.S. while building the new Chevy Blazer at a plant in Mexico. It's been more than 20 years since the last extended strike by the UAW, and few of the workers who walked the picket line back then are still on the assembly line today. But whether they are old or new, UAW members believe they should get more from the big three. The U.S. is the most profitable part of the automaker's global operations.
But auto executives are quick to point out they already share some of those profits with UAW members every year. And they warn if labor costs rise and the auto market overall slows down, then there could be smaller profit-sharing checks in the future. Phil LeBeau, Nightly Business Report, Chicago.
Still ahead, there's a game-changing way for people with disabilities to save. So why are so few taking advantage of it? Best Buy is the latest company now to express concerns about the trade war with China. The electronics retailer this morning reported earnings that were better than expected, but revenues were a bit light, and the company did lower its annual sales forecast, and that sent the stock about 8% lower on a big up day. It turned out to be the worst performing stock in the S&P 500, as a matter of fact, today. Courtney Reagan has details for us.
It was a mixed quarter for Best Buy under new CEO Corey Berry, with uncertainty surrounding tariffs and consumer spending weighing on sentiment for the rest of the year and beyond. The consumer electronics retailer grew comparable sales for the 10th straight quarter, just not as much as expected. Best Buy raised its full-year profit forecast, but lowered its expectations for sales.
There is a lot of tariff exposure. 60% of sourcing from China means that it adds a whole lot of uncertainty to the situation, particularly for 2020, because this tariff uncertainty is going to weigh on 2020 even more so than it's going to weigh on the fourth quarter of this year.
Best Buy CEO reiterated several times on the earnings call that just because 60% of its goods are subject to tariffs, mitigation strategies and the company's negotiation power will make the overall impact, quote, substantially less.
Our teams are doing excellent work with mitigation strategies, and at the same time, we're already seeing a lot of our vendors make some moves and move considerably some of that product. I mean, we talked about our current percent of COGS. We think next year that percent of COGS could be more like 40%.
Some vendors are moving manufacturing, but others are changing the products themselves to lower costs. One such vendor is JLab. 100% of its products are made in China. It's working to manage the higher cost from tariffs with some creative solutions.
We're trying to find ways that we can both trim costs to ensure the U.S. consumer doesn't get burdened as much. So if you think about it, all of the JLab products come with a charging cable that is 3 feet long. Can we trim that charging cable to 1 foot?
In addition to the tariff concerns, Best Buy expects the gaming category to continue to be soft through the year. It was one of the weaker categories this quarter. But not all analysts are concerned about Best Buy's ability to succeed.
I feel like this happens pretty much every single time Best Buy reports earnings. These were not mixed results. These were good results. From my perspective, this is a buying opportunity. I am pounding the table with both fists. This is a company with a long track record of under-promising and over-delivering.
So while there is a lot of uncertainty ahead for both Best Buy and how tariffs could change the consumer landscape, the ultimate outcome remains difficult to forecast. For Nightly Business Report, I'm Courtney Reagan.
And you would think that tariffs would really have an impact on stores like Dollar General and Dollar Tree because of their slimmer profit margins. But it turns out that's not necessarily the case. Both discount retailers reported faster than expected rise in same-store sales, and both raised their guidance. Dollar General surged more than 10%, and as it happens, it made it the best performing stock in the S&P 500 today. And after a 4% pop at the open, Dollar Tree trended lower through the day and closed down about 2%. The strong sales from the dollar stores, coupled with strong numbers recently from larger retailers like Walmart and Target, just drive home that middle-class consumers have money and they are spending it. But for how long? Joining us, you saw Michael Lasser and Courtney Reagan's report. He's back with us now, the retail analyst at UPS. Michael, thanks for joining us tonight.
Good evening, Hank. Thanks for having me.
I think about Target's CEO saying that he thinks this is the best retail environment he has ever seen. But Macy's CEO warned that consumers have no appetite for higher costs. And if the tariffs looming out there are going to mean higher costs, what happens to that middle-class consumer who's spending so much right now?
There's going to be some pressure from all the price increases associated with the tariffs, and it's going to come at an unfortunate time because it'll hit right around the peak of the holidays. I think we have yet to really see the full burden of these tariffs come through, but that's going to start in the next couple of weeks, given that the flow of inventory will start to hit store shelves, and that's going to impact how the prices that we as consumers see over the holiday.
What are the dollar stores doing right now that brings people in? Why are they doing better than some of the others right now?
Bill, what they do well is they offer very effective prices, so compelling low prices in convenient, easy to navigate formats. We're all, as consumers, time-starved, and those stores are relatively easy to get in and out. And when you can couple that with getting good deals, that's what they're doing quite well. And it's showing up in their growth, and it's in turn making them good stocks to own.
And how do you rank them when you consider the big box retailers that are also doing well right now? We heard great numbers from Target and from Walmart, to name a couple as well.
Yeah, we have buys on Dollar General and Dollar Tree. We like these stocks right here, especially over a multi-year time horizon. What they have as an advantage that some other big box retailers don't have is they're still opening stores. In the case of Dollar General, they're opening 6 to 8% new stores per year. They're coupling that with same store sales growth and returning cash back to shareholders to drive double-digit earnings growth. That makes it a very compelling investment at this level. Dollar Tree's also opening stores, but some of its business are in the midst of a transformation. Like this Family Dollar had underperformed for a while,
right,
and it's starting to get better. And we think that that's going to make a compelling investment as well.
Michael Lasser with UBS. Again,
thanks for joining us tonight.
Thank you very much. You bet. Thanks. Abercrombie Fitch feels the pain of the China trade tensions, and that's where we begin tonight's market focus, with the apparel retailer reporting a decline in revenue, and it lowered its full-year forecast due mainly to the tariff impact. To protect its profits, though, from new tariffs, Abercrombie is looking to cut the amount of goods that it sources from China. Shares slid more than 15% today to $14.45. But it was all around good news for Burlington. That apparel retailer easily topped Wall Street's earnings and revenue estimates. Burlington says it has not been greatly affected by tariffs because only about 6% of its total sales are from imported goods. As a result, that company was able to raise its full-year guidance, and shares soared more than 18% today to $205.42. DSW Shoes parent company Designer Brands saw a decline in revenue, but its earnings were in line with analyst estimates. The CEO is aiming to improve that company with new ventures, which includes the acquisition of Camuto Group and the expansion of its Canadian chain, The Shoe Company. That stock was up more than 3% today to $15.50. And then after the bell tonight, Ulta Beauty reported weaker than expected earnings and revenue. Company also lowered its full-year outlook, citing broad headwinds in the U.S. cosmetics industry right now, and shares dropped in initial after-hours trading today. It closed the regular session, though, up more than 2% to $337.45. As we all know, saving money is a real challenge for many Americans. It even makes it harder for those with a disability. But there is a program that can help families who face this financial dilemma. Sharon Epperson is in Lincoln, Massachusetts for us tonight.
Rain or shine, Brian Guay is hard at work, caring for his friends at Berryfield Farm in Massachusetts. The 25-year-old who has autism is feeding horses and his bank account. He works 3 jobs and saves over $1,000 a month with one goal in mind.
I'm save a lot of money to buy the farm. I'm gonna name the farm's gonna be the Little Patch of Heaven.
As he saves money to buy his own farm, Brian and his parents are also hoping he'll have enough money to pay for day-to-day expenses down the road. Together, they're putting money away in a special savings vehicle designed for people with disabilities, called an ABLE account.
It was a bit of a game change for folks because for so long you were told you can't save, don't have any assets.
Until ABLE accounts were created in 2014, individuals with disabilities had to have less than $2,000 of savings in their name to qualify for federal programs like Medicaid, supplemental security income, and other services. ABLE accounts remove that cap, allowing those with special needs and their families to contribute up to $15,000 a year in an ABLE account and still receive benefits.
This gives us more elbow room and gives Brian the ability to save and to plan and to do what he needs to do to take care of himself, just like everyone else has to.
Few who qualify are taking advantage of these accounts. The ABLE Resource Center estimates 8 million people are eligible for these accounts, yet as of June, just under 46,000 had been opened. Financial advisor Charles Massimo says many families don't know about these accounts or understand how they work.
With an ABLE account, if you go over that $100,000 maximum contribution, you're going to start to lose your governmental benefits. So you really have to manage that account to make sure it stays under $100,000 throughout the life of the account.
The great farmer.
Yes, that's me.
That is you. For Brian, his ABLE account gives him a chance to save for his dream, but also the reality of being able to help provide for himself when his parents no longer can.
There's an expression in the disability community, oh, I can never die. You know, I have to be here forever. None of us will be.
It empowers Brian and gives him more freedom.
And that's what I love about this. And I hope it'll help other families start thinking about it sooner than later.
For Nightly Business Report, I'm Sharon Epperson in Lincoln, Massachusetts.
And coming up, it is the most expensive residential listing in the U.S., and tonight we're taking you inside. Amazon is part of an investor group that has purchased a stake in the Yes Network, which broadcasts New York Yankees games. The group also includes the Yankees and Sinclair Broadcasting. That stake was sold by Disney, which had agreed to sell the 22 regional sports networks owned by 21st Century Fox as a condition of Disney's acquisition of 21st Century Fox. Finally tonight, a look inside a California mansion made famous more than 50 years ago when it was the fictional home of TV's Beverly Hillbillies. Now it's back in the spotlight as the most expensive residential listing in America. Robert Frank takes us on an exclusive tour.
This $195 million residence sits in one of LA's most rarefied neighborhoods.
This is the Chartwell Estate, owned by the late Jerry Perenchio, who was an iconic media mogul.
And this is the first time that TV cameras have ever been invited inside. Back in 1986, the former Univision chairman purchased the Bel Air mansion, and after a 5-year gut renovation, transformed the interior into an authentic replica of an 18th century French chateau.
Mr. Perenchio loved to entertain, so he built this 40-car motor court, and above it, he built a beautiful rose garden.
The billionaire businessman filled the 25,000 square foot mega home with rare European antiques and made some significant modern day additions.
The grand ballroom was designed for entertaining, and one of the special features of this property is that a flick of a switch, it becomes a theater. Now, I'm not going to drop names, but on this very stage, you would have A-list performers who are used to playing in arenas, playing here for an intimate gathering of 100 guests.
One level below is the estate's massive wine cellar.
It's completely climate controlled and can hold 12,000 bottles of wine. You heard me right, 12,000 bottles.
Buried underneath the chateau are 2 tunnels, original to the home's 1935 construction.
And this particular tunnel takes you to the spectacular pool and pool house. Pavarotti, who was a friend and a frequent guest to the estate, used to stay here often, and he would come down to these tunnels and he would practice because the acoustics were so great. Figaro!
The billionaire added a giant's head to the mouth of one of the tunnels and a massive steel and wood sculpture shaped like an oversized bird cage that's surrounded by private gardens and ponds filled with koi fish. Back in the 80s, the owner bought 3 neighboring properties, which expanded the estate to more than 10 acres. He converted one property into a 5,700 square foot guest house. The other 2 he bulldozed to make way for a dramatic private driveway and grassy helipad. A grand fountain he built in the backyard is flanked by a pair of staircases, each one with its own cascading waterfall. And while redwood trees are usually only found in Northern California, that didn't stop the TV titan from transplanting dozens of majestic sequoias to create a private redwood grove in his own backyard.
Not only is there nothing like this in Los Angeles, I don't think there's anything like this in the country.
For Nightly Business Report, I'm Robert Frank.
Wow. Before we go, a final look at the day on Wall Street. The Dow was up 326 points as trade tensions appeared to ease. The Nasdaq added 116. The S&P was up 36. That is Nightly Business Report for tonight. I'm Bill Griffith. Thanks for watching. See you tomorrow.